Haywood Barber, the original money coach here. Earlier this week, I gave you some connecting dots on real estate investing, how it goes, how it moves. What I want to do now is make sure that I hone you in on how to make a transaction actually happen. I want you to really know how that's going to happen. So I'm going to go over a couple of acronyms, and these acronyms you're going to need to know. We're going to keep it informal, right? Because I know everybody don't like stuffy. But we're going to go over how to calculate an offer, how to make that, and know that you're in a safe zone, okay? Now, you know that we're using only a $1 down strategy. That still works. It worked for me 2 years ago. It worked for me 10 years ago, and it worked for me even 2 years before. I've been doing this now for about 13, 14 years. So when I first got in, the market was horrible, and everybody said it'll never work, and it worked then. So it only works in your neighborhood if you believe that it won't work. The acronyms that you're going to need for this segment are two: CMA, Comparative Market Analysis, and ARV, After Repair Value. Okay? So in the after repair value, you're going to get that from the CMA. And the CMA itself is you're going to get from your realtor. And the realtor is actually going to be the one that's going to supply what the market values are for houses in your general area. I like to keep it fairly tight. I like for it to stay somewhere around a quarter-of-a-mile radius. If you're in a city, I like to stay on that block. Okay, so I want that to be clear. So then you have in the CMA and then the ARV, after repair value. Whenever you go to a real estate investment club or you're selling your properties, once again, you're always going to sell your properties when you're wholesaling to landlords, rehabbers, and developers. Landlords, rehabbers, and developers want to know what is the ARV. What is the after repair value of the house? See, they understand that they might not be getting the house in the greatest shape, which is okay. Remember, your best deals are going to come from houses that have some level of distress. So that's okay. But the landlord, rehabber, and developer want to know how much the house is going to be worth after it gets repaired. Okay? That is, and so you need to know both of those. CMA, which comes from the realtor, ARV is what you calculate, and what the landlords, rehabbers, and developers are going to be asking you as a wholesaler. Okay? And remember, we're doing a $1 down strategy, so your investment is $1. And what is your risk? $1. Something goes wrong, what do you lose? $1. Haywood Barber, the original money coach, at theoriginalmoneycoach.com. Thank you very much.